In the fight for the future of money, one battle is already heating up: stablecoins versus central bank digital currencies. On one side, you have private companies like Circle with USDC, PayPal with PYUSD, and Ripple with RLUSD, issuing digital dollars that run 24/7 on public blockchains. On the other, you have governments around the world racing to launch their own CBDCs, central bank digital currencies, designed to replace physical cash with programmable government-controlled money. So who will win? Let's break it down. Stablecoins, the private sector dollar. Stablecoins are already here. USDC, for example, has processed over 12 trillion in on-chain transactions and is accepted across thousands of exchanges, wallets, and payment apps. Unlike CBDCs, stablecoins don't require waiting on government pilots or legislation. They're fast, liquid, and global. They ride on top of Ethereum, Solana, Stellar, and even XRP Ledger, making them interoperable with the broader crypto ecosystem. But stablecoins also face pressure. US regulators are debating stablecoin laws, requiring issuers to hold full reserves in US treasuries or cash, and ensuring audits. In many ways, stablecoins are becoming shadow CBDCs, regulated enough to satisfy governments but still flexible enough to evolve with crypto. CBDCs, the government response. Across the globe, over 130 countries are exploring CBDCs. China has already rolled out its digital yuan to millions of users. Europe is piloting the digital euro. The US is researching but hasn't committed, because frankly they see private stablecoins like USDC doing the job already. CBDCs promise efficiency, direct distribution of money, and the ability for central banks to control monetary policy in real time. But here's the catch. They also come with the risk of total surveillance and control. Every transaction could be tracked. Spending limits could be imposed. Money could expire if not used by a certain date. It's programmable money, but programmable by the government, not by you. The clash. So here's the key question. Will people trust governments to control every digital dollar they spend? Or will they prefer private stablecoins that work across open networks? The truth is, we may not get a choice. Some governments could mandate CBDC-only systems, especially for welfare payments, salaries, or taxes. Others may let stablecoins flourish as long as they're regulated and backed 1.1 by safe reserves. Meanwhile, institutions are already adopting stablecoins as settlement tools. BlackRock's Tokenized Treasury Fund works with USDC. Stripe has integrated USDC payments. Even Visa and MasterCard are experimenting with stablecoin settlement. Whether or not governments like it, the market is choosing stablecoins. Crypto's role. This battle matters for crypto investors because stablecoins are the fuel of the blockchain economy. They're the most used tokens in DeFi. They power remittances, exchanges, and payment rails. And whichever chains dominate stablecoin issuance, whether Ethereum, Stellar, Solana, or XRP Ledger, will become core infrastructure for the digital economy. CBDCs, on the other hand, are unlikely to reward investors. They'll be permissioned systems run by central banks. That's why the real opportunity lies in regulated, transparent stablecoins. They can bridge the traditional finance world with crypto, while CBDCs attempt to lock users into closed systems. The likely outcome. The most realistic outcome is a hybrid system. Governments issue CBDCs for policy and compliance, while stablecoins act as the global user-friendly layer for payments and cross-border commerce. Just like Visa and PayPal both exist in today's system, CBDCs and stablecoins will coexist. But only one side, stablecoins, will reward the builders, the investors, and the innovators in crypto. At LTL Productions, we believe this clash between stablecoins and CBDCs will define the next decade of money. This was part 2 of the Tokenized World. In part 3, we'll explore how tokenization is breaking into real estate, commodities, and even art, and why fractional ownership is about to change everything. Smash that like button, share this video, and subscribe to LTL Productions. It helps more than you know. And remember, this isn't financial advice, it's financial foresight.